Hey everyone, and welcome back to Money Mindset Hub, where we break down the world of finance one empowering conversation at a time. I'm your host, Raul Sofa, and today we're going to talk about a little secret that the wealthy have known for decades, but is now more accessible than ever. Let me start with this. What if I told you there's a way to invest in the entire market without needing to pick individual stocks, guess market trends, or stare at a screen all day? That's exactly what index funds allow you to do. And if you've been feeling overwhelmed by all the investing jargon, don't worry. By the end of this episode, you'll understand what index funds are, why they're ideal for beginners, and how to get started with as little as $100. So grab your favorite coffee, tea, or even that old school notebook, because we're about to simplify your financial future. Let's paint a picture. Imagine you're at a buffet. There are 500 dishes available. You could spend hours trying to pick the best meal, risking food poisoning or missing out on something delicious. But then someone hands you a plate that includes a little bit of everything. The top-rated dishes, perfectly portioned. That's your index fund. At its core, an index fund is a type of investment that tracks a specific group or index of companies. Instead of investing in one company like Apple or Amazon, you're investing in all the companies within that index. One of the most popular examples, the S&P 500 Index Fund. It includes 500 of the biggest, most established companies in the US. So when you buy into an S&P 500 Index Fund, you're investing in Apple, Microsoft, Google, Coca-Cola, and hundreds of others, all at once. And here's the kicker, they're low cost, low maintenance, and historically outperform the majority of actively managed funds. Let me share a quick story. When I was just starting out with investing, I thought I had to be the next Warren Buffett, studying charts, researching quarterly reports, predicting the next big tech boom. Guess what? I was overwhelmed and almost gave up entirely. But then I stumbled across a quote from Buffett himself. By periodically investing in an index fund, the know-nothing investor can actually outperform most investment professionals. That was the light bulb moment. Index funds don't require you to know everything. They work even when you don't have time, experience, or a financial advisor on speed dial. Because they follow the market, not your emotions. Here are the top 3 reasons index funds are beginner-friendly. 1. Diversification. One fund spreads your risk across hundreds of companies. 2. Low fees. No high management costs eating into your returns. 3. Passive growth. Set it, forget it, and let compound interest work its magic. So let's break it down. An index fund is usually structured as either a mutual fund, bought directly through a provider like Vanguard or Fidelity, or an ETF, exchange-traded fund, bought like a stock through a brokerage app. Each one holds a basket of investments designed to match the performance of a market index. So when the market goes up, your index fund usually goes up. When it dips, your fund might dip too, but the point is, it reflects overall market performance. Historically, the S&P 500 has returned about 7% to 10% per year after inflation. That may not sound sexy in a world of crypto and meme stocks, but it's powerful. Let's say you invest just $100 a month in an index fund with an average return of 8%. In 30 years, that grows to over $135,000 from just $100 a month. That's the power of compounding and patience. All right, here's where it gets actionable. You're ready to invest. What's next? Step 1, choose a platform. Use a reputable brokerage or robo-advisor. Popular platforms include Vanguard, Fidelity, Charles Schwab, Wealth Simple for Canadians, Robinhood, M1 Finance, or Sophie. Many of these have no minimum deposit or trading fees for ETF. Step 2, pick your index fund. Start simple. Look for S&P 500 Index Fund, example, VOO, SPY, FXAIX. Total Market Index Fund, example, VTI. International Index Fund, example, VXUS. Step 3. Set up Auto Invest. Commit to a monthly amount, even if it's $25 or $50. Consistency matters more than the amount. This builds discipline and takes emotion out of the equation. Step 4. Stay the course. Don't panic when the market dips. That's normal. Stay in the game, keep investing, and think long term. The market rewards patience. Let's bust a few myths real quick. I need a lot of money to start. Nope. Many index fund ETFs let you start with under $100. They're boring. Sure, they're not flashy, but boring is beautiful when your account quietly grows over time. I should wait for the right time. Time in the market beats timing the market. Every day you wait is a missed opportunity for compound growth. Don't just take my word for it. Warren Buffett once said he's instructing his heirs to invest 90% of his wealth into index funds. Why? Because they're simple, effective, and beat most actively managed funds over the long run. Even Jack Bogle, the founder of Vanguard and the creator of the index fund, once said, "Don't look for the needle in the haystack, just buy the haystack." Powerful, right? Index funds let you own the haystack, and they've helped millions of everyday people grow wealth without needing to become market experts. Let's bring it home. Investing doesn't have to be intimidating. You don't need to be rich, genius-level smart, or glued to CNBC. You just need the courage to start and the consistency to keep going. And with index funds, you're not betting on one company. You're betting on human progress, innovation, and the belief that over time, we grow. So here's your invitation. Start today. Even if it's small, even if you're scared, the future, you will thank you. If this episode helped you understand index funds a little better, do me a favor, like, subscribe, and hit that notification bell so you never miss an episode. And hey, if you've already started investing, I'd love to hear from you. Drop a comment, share your journey, and let's grow together. Until next time, keep your mindset smart and your money working for you. This is Raul Sofa, signing off from Money Mindset Hub.